All right, what's up guys? My name is Zach and behind me is my 2019 Mazda 3. Now I own this car. I actually financed it and that's what this video is going to be about. Now, before we get started, I want to make something abundantly clear. This is not one of those get-rich-quick videos or, how did he do it? He's only 22. This car isn't a very impressive car for a 22-year-old to own. However, there are a lot of things that went into financing this car that I had no idea about. I was getting into something that I had no background on. And so, if you are younger and you're looking to get a car like this, if you want to finance a car, I'm going to tell you some things that I didn't know about, so hopefully it'll make your purchasing experience go a lot smoother and you'll know what to expect when that time finally comes. And so I know that it's fun to go online and you do the little payment calculators and you look at a price and you see, oh, I could do that. That's so reasonable. Why doesn't everyone buy cars? Why doesn't everyone finance cars? It's just a little bit a month. Well, I got sucked into that as well. So that's what we're going to talk about for the rest of this video. First of all, like I said, I am 22 years old, and actually by the time this video comes out, I will be 23. Exciting. But also, before we get into it, I will leave timestamps in the description of these certain topics I'll be talking about. So if you want to skip around to something, you can absolutely do so. But the first thing you have to do is find the car for you. Now, this is a Mazda 3. It's a 2019. It's all-wheel drive, has Apple CarPlay, Radar Cruise, all the things that I wanted. And so this is something in my budget that I found to work. It had all the amenities that I wanted. And that's important. If you're going to spend money on a car, you want to actually like it, because as I'll talk about a little bit later, I will be paying this car off for the next 5 years. So you better like it. And great, now that you've found the car that you want and you got out of the sunlight that was hurting your eyes, now you can go into the dealership and start talking to them about financing. The first thing that they're going to ask you for is your job history. Now, this was a tricky part for me because I do YouTube full time. What do I tell them? So you should have that figured out. Also, going into it, they're going to ask you to declare how much you make annually. Now, if you're a salary person, this is easy peasy lemon squeezy, and you put down a solid number. If you're an hourly person, give this your best guess. Take a couple monthly averages, multiply by 12, and that should be your yearly income. Some places will ask for like a tax return or some type of solid document verifying that you actually do make that money and you're not just making it up. And so, just be ready for that. Be ready for them to ask about your current employment because they want to know that you're making money. If you say unemployed, odds are they're not going to let you finance the vehicle. After that's done, great, they've verified where you work. Now it's time for the credit application. And this is the hardest part as a young adult. That is why a lot of young people can't actually get cars financed. The credit application, in theory, is actually pretty simple. They run a credit check on you to see if you have good credit. The issue with being a young person and doing that is that when I bought this car, I didn't really have much credit history. I've had a credit card, but I never bought anything big on it. I'd buy gas or a smoothie or a Christmas gift here or there on my credit card. I never really used it that much, and so I had the exact same credit history as a first grader. And who would finance a car to a first grader? So there's something called a co-signer. A co-signer is a second person that will sign for the car as well as you, and basically they act as a backup. If you can't make your monthly payments, the dealership is going to start going after the co-signer for the monthly payments. And so a co-signer can really be anyone. Usually it's a relative. I would highly suggest a relative, parent, older sibling, grandparent even, to help you co-sign for the vehicle. Just be sure that that person has good credit and they trust you enough to not wreck their good credit. If you choose a co-signer with a 200 credit score, you're not going to get the loan. If you've never purchased anything big, or you've never had an apartment, or you've never had any debt or any sort of credit, you're going to need a co-signer. I would highly recommend looking into a co-signer and getting a co-signer before you apply on your own. Because when you apply for a loan, it does what's called a hard pull on your credit. That means that by applying, it actually brings down your credit score ever so slightly. So you don't want to then go on your own, get a credit check, get denied, and then go back with a co-signer because they do another hard pull that lowers your credit slightly. So then you've had 2 dings on your credit as opposed to the just 1. So if you're young, just go in with a cosigner because odds are your credit is not good enough to go in alone. So now that your job checks out and your credit hopefully checks out, you're ready to move on to actually getting the car. Now, there's a couple different ways that you can pay for it, and odds are dealerships will advertise for a couple different months. This is a 60 month loan. That's 5 years. I've seen dealerships do 72-month loans. I've seen dealerships do 48-month loans. It all depends on what you're comfortable with and how much you can afford. But what helps your monthly payment is a down payment. So when I bought this car, I walked in with $2,500 and I slapped it down on the table pretty vigorously. I felt pretty cool. And that served as a down payment. So a down payment, essentially, well, it's exactly what it sounds like. You're putting money down on the car right away. And so this car was $23,000 when I gave them the $2,500. Now I'm only getting a loan for $21,500. Your down payment actually lowers the total price of the car and the amount of money that you're borrowing from the dealership. So your monthly payments will start chipping away at the rest of the value. So say I want to buy a $60,000 car, but I put $30,000 down, then I really only have a loan for $30,000, and that's going to be like $400, maybe $450 a month. So that's something to think about. I'd highly recommend going in with a decent sized down payment. However, don't stretch your penny. Do not put every last dollar, nickel, and dime you have down on the car. You want some extra breathing room. At least in my case, that's what I did. I left some money aside in case I can't make a payment, in case I get a flat tire, whatever it may be. So you can decide on whatever monthly payment it suits you. Like I said, I went with 60 months, kept the payment pretty low, as well as finishing in 5 years instead of 6, which I liked. The other thing to look out for is APR. That's a percentage of interest that you're gonna owe on the car over its lifetime. I got 2.9% financing on this car. So at the end of the day, I will pay 2.9% more than the car was originally stickered for. Some dealerships will do 0%. Right now, during COVID, you can find them with 0% financing. Some dealerships, they're gonna want 5%. Some dealerships are gonna want even more than that. I would highly recommend anything under 5, you're okay. As low as you can push that percentage, the better. And last but not least about the monthly payment is I know it probably looks all golden. You might be doing the little calculator on cars.com and thinking, wow, $300 a month, I can definitely do that. Well, the dealership is probably also going to try to get you to get some warranties and things like that. Now you can always opt out of this, but I actually did opt in for one warranty. I do have a 7-year bumper to bumper warranty on my 3 hatch, and that was an extra $25 a month. So my payment was raised monthly, but I can sleep a little bit tighter at night knowing that when I take this car on road trips, I am covered. And so at this point, you should be good to go to drive off the lot. Just remember that your cosigner's name is also going to be on the title. Don't let that shock you. I know car ownership is a big deal, at least for me, and having my name on the title is one of the best feelings in the world. However, your cosigner's name will be on the title as well, just something to think about. But once you agree on a monthly payment, your money down, and your credit checks out, your job checks out, the car's yours. You're good to go. Now, the dealership will hold on to the title until you fully paid it off. You won't actually have the physical paper title, something to know as well. And you can set up through them, usually you could do direct deposits where at a certain point in the month, they'll just pull the payment each month out of your account, done, easy, simple, or you can do an older fashioned style method as well. But let's talk about insurance because this is a very big deal for younger people like me. When you finance a vehicle, at least here in the state of Illinois, you will have to check with your local rules. I have to get full coverage. I can't just do liability. Just liability means if I hit someone, they pay out, but if anyone hits me, I'm toast. And that's what I had on the Miata because if someone hit me, who cares? But Mazda cares if someone hits this car. And so when you get insurance, you have to price out getting full coverage. And if you're under 25 years old here in the US, that means a big, big surcharge. Because our brains aren't developed yet, or whatever the excuse is, under 25-year-old people, especially males, more so males, men under 25 have higher insurance rates, and of course, full coverage is even higher than that. So definitely talk to your local agent because I insure this car on my own. My parents don't insure it. No one else insures it but me. And so all of that payment is on my shoulders. And because of that, it's a lot higher. So I just don't want you guys to be scared or nervous or shocked when you buy your brand new car and then you call up the insurance agency and they're like, hey, yeah, we want $160 a month. And you go, oh, okay. I don't want that to happen to you. I'm not saying that happened to me, word for word, but you have to get full coverage on a vehicle like this, and that's going to be expensive. That's just how it is, unfortunately. But after about 3 hours of signing paperwork for all the warranties and agreements and blah, 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 you have a brand new car. And that's exciting. It really is exciting. And this is something I absolutely need because I drive about 2,500 miles a month. If I bought a used car for a lot cheaper with a lot higher mileage, I would just blow through the mileage immediately and start having problems a lot sooner. And that's why I got a new car. That's why I went new. But I hope this video helped. I hope if you guys are considering financing a car, I hope this sheds some light on the possible things that might come up. If it works for you, then it works for you. If it doesn't, then I would start looking elsewhere. All I want to do is give you guys the information to succeed, and I hope you guys are very smart with it. But I hope you guys enjoyed this video. If you have any questions, comments, or concerns about financing a car, please leave it in the comment section down below. But hope you guys enjoyed the video. Don't forget to rate the video, comment on the video, and subscribe if you really liked it. Take care, guys.